Welcome to the fifth episode of What's Trending with myself, Adrien, and Nolan. There's been a lot going on in the market, especially with all this tariff talk, which we are going to dive into right at the beginning of this episode. But in addition to the tariff talk, I know with myself and business at Ticker Trends, and just also my personal life as well, there's been a lot going on. And we've been super busy, and that's kind of why we missed some episodes. But I'm really excited to get back into things. And we certainly are going to continue to consistently pump out these episodes and hopefully make them at interesting times when we can talk about some interesting opportunities. I'll briefly go over what we'll discuss in this episode, which will be the tariffs and things going on in the economy related to that. Restoration Hardware, New York Times, Monster Energy, and Kroger. And obviously, we'll dive into why we're talking about those later. But yeah, how have you been doing, Nolan?
Yeah, like you said, pretty busy, kind of hard to, like, I know for your job, your 9 to 5, kind of keeps you in the market. No way to kind of look away. I've obviously been able to kind of hide a little bit. And I was impressed by the fund's performance. Definitely looked a whole lot better than mine. Kind of wish I'd just been, anyways, won't say what I wish I'd done with my money, but it's been I've had a few of these kind of tougher learning kind of months, but this has been a trickier one where it does seem kind of inevitable what's been going on here, but always trying to learn, always trying to improve. A lot of it makes sense. I know we talked quite a bit before here, so we'll save some of it for there. But yeah, I got the other part I think I shared before. My wife is pregnant, and due date is now 6 weeks away. So got a few things that are kind of pulling my attention. So this is one I think hopefully it'll be 3-1, you talking versus me. Again, I have some of these ones I've looked into, but this is one that's going to be Adrien will drive. Maybe we'll flash a couple screenshots here and there, but hopefully it's, again, you've got some pretty good thought out thesis as we were kind of preparing for this, and excited for you to go into a little more detail here.
Yes, congratulations on the child coming.
Boy number two. Boy number
two. And yes, I mean it's been an interesting time also for our fund as well, which fortunately we are outperforming the market, which has been great. I do think that it's what makes this exciting for me is seeing new environments constantly and navigating them in the best way possible. So certainly our goal is just to continue to outperform the market, and I am pretty, I'm confident that we will. And so I hope that our previous results speak for themselves. And, actually something that I'm very optimistic about is when we've had discussions in the past with like potential investors and things like that, something that they always are very skeptical about are the downturns, which is, you guys are doing great now, but just wait until something bad happens and then you'll blow up or whatever. So it's actually a really exciting thing for me to be able to say, hey, like what I love about the asset management industry is, the numbers speak for themselves. So I can be as young as I am. I can have this technology and this and that. People might be skeptical, but if the numbers are there, then the numbers are there. So I think that's what I'm excited about. It's a great opportunity. It's a great proving ground to show our ability to go through these periods. So I'm optimistic. I'm very optimistic about the future of that. But I guess we can get into the tariffs just because that's been so much of what's been moving the market recently. I guess it would be interesting would just to be your general overview, Nolan, of what's been going on with the tariffs, or what your potential view is on that.
Yeah, again, that's one I'm going to want you to talk more than me, but I'll give my quick take. I think a few things we overlapped. I mean, we talked about, I asked if you'd seen the kind of how we think it was potentially calculated of taking the trade deficit divided by imports. And so there's some interesting ways of kind of how this is positioned as a negotiation, something that's it's not intended to say here, but again, I don't think it was intended. I don't know if it was intended or not to even get to this point or not, but we're at where we're at. I'll let you talk a little bit about how you think it's sustainable long-term, what companies could fall on their face here. But I mean, I'll bring mine up later, but I mean, Google Trends for tariffs are the highest day ever was yesterday at 5 p.m. Unsurprisingly, we'll continue to see that. Again, hopefully it doesn't go any higher, but I think, I don't know. I need to consider my allocation, and whatever odds are that this is not the most, who knows, that there was more search volume, more interest, more curiosity because something else that happened that's even more extreme and dire. But I'll let you take it from there, what your thought was.
Yeah. I thought the whole context around the event and even the naming and words that were being used were just very interesting, and I think maybe dictate some of my opinion on it. Yeah, I mean the Liberation Day branding was interesting, and then also definitely even the wording around reciprocal tariffs. I thought that was interesting as well. Definitely what I think is there's some potential element of negotiation here. And I think on Twitter and online there's been a lot of different opinions on this. I've seen people talk about how these tariffs are permanent, and actually it's Trump's plan to kind of subsidize having fewer taxes on other things like less income tax and things like that. I've seen people discuss that Trump is trying to kind of strategically enter into a recession to lower interest rates. There's
Yep.
kind of every theory out there, and people have very strong views on those theories. My personal, I guess, if I had to take up one of these views, is maybe more of a boring one, which would be that this is much more of a negotiation tactic. And I think potentially maybe it's possible that similar to the Canada and China tariffs that were started earlier on in the administration, I think it might be a similar potential situation where, Trump is coming out guns blazing, scares everyone. Everyone thinks it's going to be more permanent or more severe than it is. And then the second that they start to get concessions or some of their demands met, maybe the market starts to cool down a bit in terms of being scared about it. That being said, my opinion on that could be completely wrong. And maybe one of these alternate paths that other people are very confident in might be true. I know some of the secretaries, some of the other people in his administration have expressed alternate views to that pretty directly in terms of saying that these tariffs are more permanent. So that would completely counter what my potential view is. But I do think something that's interesting is the whole framing of like the reciprocal aspect. And we were talking about this briefly before as well, which was like, why did Trump come up with these numbers and like they don't directly reflect what the actual tariffs are? I think part of like a negotiation tactic, I think having this branding around reciprocal, meaning that it's something that Trump is trying to, act like he's being more defensive, where in reality he's being offensive. But the reciprocal branding means that he wants to kind of get to the negotiating table. And then also, I think the reason why the numbers don't necessarily make direct sense to like what other countries have in terms of tariffs for the U.S. Would be because if those other countries had, let's just make up a number, if the EU had a 10% tariff on the U.S. and the U.S. just did an exact reciprocal 10% tariff on the EU, then the EU could just take away their tariff and no longer, then it's no longer a reciprocal tariff, right? They have a direct like way to solve the problem. But by Trump kind of bringing up these numbers, which have more context around them, like it's not just what the tariffs are, but it kind of reflects like these trade imbalances and like he said, like currency manipulation and all this random stuff. It means that these countries can't just say, well, we'll take away our tariffs, so can you take away your tariffs? Now it gives Trump again leverage and a chance at the negotiating table, not just to ask for, hey, can you lower your tariffs, but can I also ask for other stuff too? So I think that's kind of what I could be completely wrong, but I think that my view on the strategy could be something to that extent. I think in general, what I was mentioning to Nolan as well is potentially that the best way to play these tariffs are not by betting on some of these outcomes, which ultimately, at least in the short term, are more uncertain or unknown, such as, will the tariffs be permanent or like what's Trump's strategy? I guess those are things that we can't certainly know. But what I was saying is I think there will be more interesting opportunities on things that we do know. So things that will happen no matter what, such as for some of these countries which Trump started the tariffs on, they were so extreme that they could threaten the entire stability of some of these economies. And I would virtually guarantee that for these countries specifically, even if the tariffs are permanent, for these countries, they will negotiate and they will try to get those tariffs down. So things like that, where it's regardless of what Trump does, there will be some negotiation from Vietnam to decrease U.S.'s tariffs. And so betting on things like that, things that are certain, or even things like some of these public businesses like Restoration Hardware or VF Corporation, which is a clothing brand. It owns North Face and Vans and things like that. Those, specifically for VF Corporation, if these tariffs go into effect for now until forever, they could hypothetically go out of business. And so I think there are also certain bets like that where you're saying, this is a certain situation that they would go out of business if the tariffs kind of stayed the same. So what are some views that you could have on that to say, maybe Trump wouldn't let that happen, or maybe something would change. And so then I think there are certain bets you can make there as well. So I guess that's how I would structure myself in this situation, is not betting on things that we don't know, or not saying that, oh, Trump is actually going to decrease taxes or this is his long-term strategy, but more deciding on things that are certain, like a certain outcome that is a result of things that have already happened, and then making bets around that, I think, could be more interesting.
Yeah, again, we've talked about how you've been living in this. I've been kind of hiding from this, to overly summarize it. But it is interesting, again, as far as focusing on the things versus those that you don't. Where I'm guesstimating is there a likelihood of there's going to be something else is going to happen. But I do think, these numbers are set in a way. Again, the Excel-based element of how they came to these numbers, where they started at, they're not planning to be there. Again, I'm curious of, take an extreme one like Vietnam, where I visited Vietnam, and you can see like the leftover. You can see leftover those are real North Face things over there. You can tell like how big some of the manufacturing elements are there. But what do we want back from Vietnam? But I guess there's always something more we want back. I mean, you can say it's in Canada. We want to kind of curb drugs getting across the border in Canada. So there's certain things I can see what we'd want. Again, who knows? But again, I think as far as an investor, kind of focus on the things you more know. And I think you've given me something to chew on here in terms of trying to kind of focus a little bit more on that.
Yeah. Right. Yeah. And then I think in the short term, ultimately, I think another thing which would be maybe more potentially certain, although there is some element of prediction here as well, but I think something that's more potentially certain as well would be that things could potentially get more scary in the short term rather than resolved. I think for many of these paths, whether it's the tax thing, whether it's Trump trying to lower interest rates, whether it's negotiation tactics, whatever it is, in like the very short term, like maybe next couple of weeks, this could still be there could be a lot of things that come up which would scare the market a lot before like before the strategy is revealed. So I think in a couple of weeks we'll kind of know more of what his strategy is, but for like the very short term, I don't think he'll reveal that, and that's just going to scare people a lot. So yeah, in the short term, I think it'll still be a more volatile period for sure.
Yeah, I think I'm going to have to look a little harder at a few positions and figure out, is it at least tax loss harvest a few things for 30 days that, again, I might like some of the search volume, and I might like some of the longer term stories of them, but it could be good to put some on the sidelines for me as an individual, speaking to my own side, not financial advice, not financial advisors, kind of stipulation there. Yeah, don't follow me right now, but we can hop into the next one there. I don't know if, again, I don't need to share any. You can take a look at Google Trends if you want on the word tariffs. They're the moon from where they've been. Literally, you can look back through since 2004. We've never had anything like this. So we'll see where it goes from here. But it's very well could be that this is not a blip. And I know, again, you alluded to it quickly, but I don't know if I'm going to turn the page on it. But like one of the theses is like refinancing the debt. And again, this is way out of my head. And then have that being a means in which you have to do interest rates. And again, you can go through a Twitter thread and you can see all the pros and cons, how it could backfire in either way. And so I don't know which one to pick and how to allocate myself. But it is a particularly trying time. And yeah, I'm trying to figure out what would be a catalyst that tomorrow it opens up 10% green on the other side around. It's really hard to picture that it'll happen like that. I'll be very curious. Has there any, I guess I haven't had a chance to follow the news cycle as much as you have, but today, has there been any news of any any countries early wanting to play ball, like, or is it? I'm just curious when one fall, like, I'm curious how long they'll be like. They all hold out the long again. If we start seeing some kind of, I'll be very curious on the very first ones that do kind of say they're gonna come towards the middle.
Right. I mean, I would say in a situation like this, there is just so much constant new information that, I would say I stay informed to the extent that would be helpful, but at the same time, while still maintaining time to kind of manage the portfolio. But so far, there has been already discussion. Primarily, ones I've looked at have been some of the European countries. I believe it was like France and Germany have already kind of started planning their retaliatory tariffs. And then I believe even the head of the EU had been kind of already warning, that there would be tariffs there as well, if the negotiations kind of didn't start soon. So as far as I know, I do think the retaliatory tariffs will come pretty quickly. And I think that's also one of the things that would be the short-term escalation factor, because maybe even if there are negotiations, the retaliation might just happen anyways before the negotiations can end. That's like another kind of escalation scenario where this could just start to increase faster and faster in terms of like a short-term fear in the market.
Yeah, we can move on to the next one. I'm going to stop the screen share, but it does seem like a few are saying they're on wanting to play ball: Australia, Japan, UK, conversely EU, China, etc. So you guys can all use ChatGPT yourself to kind of get a best read on what's going on. But it will be interesting to see what a successfully negotiated one looks like here, if that's even the best way to term it. But yeah, you want to take us to the next? We'll go into some tickers.
Yes. So the first business that we'll talk about is an interesting one, Restoration Hardware. Something that I thought was interesting about this one, and I guess for the viewers, they can decide if they want to look into this further. But Restoration Hardware is kind of the first business, like very literally one of the first businesses to have earnings right during this event. So they're kind of like the first larger company right off the gate who had to give their opinion on these things kind of even live as it was happening. So what ended up happening here, you can see Restoration Hardware price was down 40% today. I think at the peak it was like 50% down. And this is something that I think in general will happen with these tariffs, is with financial modeling and market participants. They greatly value certainty or strong answers and opinions on things, so that they can update their models and risk parameters and things to value businesses. And like what happened with Restoration Hardware here is this is the first view into if like every CEO from every public business had to get on a call and explain what their opinion was of Trump's tariffs as it was happening, I think maybe a lot of them would have a similar impact as Restoration Hardware, where it just injects this mass amount of uncertainty into analysts and market participants about the feasibility of a business when they have these massive tariffs. Because essentially for a furniture import business like Restoration Hardware, it's directly harming the viability of their entire business. Now, I mean, in addition to this, on like the tariff side, something else that I thought was interesting, and I actually kind of recommend listening to the earnings call from this yesterday. But he also mentioned, since of course Restoration Hardware has exposure to the housing market, he mentioned that this is one of the worst housing markets that he's seen in almost 50 years. And so in the context of this, is he was essentially saying that the housing market today is worse than 2008. And this is from a CEO who's a very, he's been operating Restoration Hardware for a very long time. I mean, the whole sentiment of the call is just generally pretty negative on the consumer side, on housing market, on the viability of some of these businesses, especially with tariffs and some of the risks that are going to be coming in. So I thought it was super interesting to see, and it kind of added to my potential thesis that if other businesses have to have earnings calls post the tariff announcement, I think that it will scare a lot of the market, to be honest, because the more and more that CEOs and management has to discuss these things, which ultimately they don't know the answers to, the more that the market kind of has to de-risk and price in the probability of a lot of potentially bad things happening. And so I think that's what you saw with Restoration Hardware yesterday.
Yeah, it's one where I mean, you can hear a CEO saying "oh shit" on a call, seeing a number going down. It's an interesting time to figure out, like, again, like you said, how many CEOs across the country and other industries saw that yesterday, what was going on there.
Right.
Again, I think
On the
yeah,
call, he
looked
he
at it.
saw
Yeah,
that the price was down 25%, and he said, "Oh shit," on the call. Right. And
yeah,
then now this morning he probably wakes up and the company is worth half of what it was worth yesterday. And I can
even
only
another. Yeah,
imagine the reaction to that, right? I think that's why it's such like a visceral it's such a visceral reaction to like a live reaction to what's going on, right?
yeah. No, and again, like you said, I don't know. Do we want to save the time to talk about VF Corporate? I mean, like you said, some of them, the solvency of the company itself could be questioned if this were to be withstand. So again, I think again, we go back to probably our earlier conversations around what is this in terms of how is it supposed to, is that the desired pain that Nick and other ones are talking about that we need to have, like it's a recession could be a good thing, or yeah, it's just, we'll see what ends up coming from there. And I don't, again, this is not full expertise. I spend hopefully an hour or so a day trying to get myself informed on these things. So I know you're deeper in this than I am, but it is one where it's pretty clear for me I should be risking off and waiting and seeing for me.
Right. Right. Yeah. I think, like you said, the solvency or viability of many businesses will be in question with this. I'm not saying that Restoration Hardware is like necessarily at the same level of risk, but I do think that like yeah, I mean in terms of the second order impacts of this, if it were to be a long term or permanent um, strategy for the Trump administration, so some of these businesses will definitely um, would not be viable with their um, current margins of profitability and strategies of production and things like that. So that's why I kind of think that to an extent, I don't think there would be desire from the Trump administration to have like VF Corporation and Restoration Hardware or probably hundreds or thousands of these companies kind of disappear. And so that's why I also think that there has to be some level of temporary aspect to this, or a further strategy like we were talking about earlier, which would kind of supplement or save these businesses from going under. But I think it creates an interesting opportunity because you have a company like Restoration Hardware, which is devalued 50% in one day. So it was pretty interesting to see.
This is a personal question, I guess, a little bit. As far as, again, my wife and I are hoping to buy a house, whether it's in a year or two. Do you also have a take in terms of what this could mean? Have you spent time looking at housing market implications of, again, again, even when we were preparing for this, I hadn't considered the quote around the worst housing market he's seen in a long time. Again, I follow a few YouTube channels that do a pretty good job of bringing data into what percentage of which different locations are up year over year in terms of sales. And obviously we're getting, a lot of them are flipping. But I was curious if you had any take on the housing market, or we can move on, but I was just curious if anything there.
Um, yeah, for me, I wouldn't necessarily have a direct take on the housing market. But yeah, I mean, I think that um, it's been, uh, I think it's more of a earlier byproduct maybe of like economic uncertainty in certain sectors, which then trickles into the housing market. Um, and yeah, I mean, to be honest, I don't have a very strong view.
Yeah, sorry to put you on the spot with that one again. I'm just trying to figure it out a little bit. I mean, it's I made out like a bandit with Wayfair back when stock was plummeting and COVID in place was happening, and this company that's located near me and headquartered in Boston, where I'm at. And yeah, so I know the company quite well, but obviously like Wayfair has been on a slide, Restoration Hardware's on a slide. I mean, I went through all my watch lists over the years and seeing which companies were down the most, and yeah, furniture in particular. One, kind of the sourcing of the products, then two, what's going on with the market on top of it. So it's a double whammy, and I guess it's an oh shit when you're the CEO and you're seeing some of those playing out. And I mean, I don't know. I've got some ways in which I try to keep an eye on the market at large, but it has got me curious around kind of this being a domino in terms of what else is going to happen for that. Or yeah, let's move on to the next one. But it's obviously interesting times, a lot of unknowns and a lot of like second order effects that are going to be very, very interesting to follow.
Yes,
To
yes.
put it, yeah, one way.
Yes, and I think the second order effects, like you're saying, will be as well on the earnings calls for as these businesses announce performance. There will be a lot of opportunity within this kind of rapid change environment to have more niche understanding on some of these sectors. So if there are people who have very niche knowledge in certain aspects of the housing market, then there could be a big opportunity there to understand the second order impacts of some of the tariffs and some of these industries that are going to be struggling and how that can impact the housing market. I mean, for example, with Restoration Hardware, I mean, if you're looking to buy a new house, actually it would be great because you can get all this discounted furniture since they built up all this inventory and now they can't sell it. So in a way, right, is actually kind of that would be maybe like a weird positive of this tariff structure, which is some of these businesses might have a lot of inventory that they built up, and then you're going into a weak consumer environment, so they're trying to offload it at discounted prices. But then that could also hurt the housing market because if the materials and prices of the things in the homes are less, then people might be selling homes for less. Yeah, so it could be interesting. But the next business we're going to talk about is New York Times. And I guess, Nolan, you can start with an introduction on that.
I'm actually not as abreast on the New York Times news from this week. So I guess you could take it from me. And my wife just called, said I got 7-minute warning for me on this before the nanny has to leave. My wife has to get out of here. But take it away on New York Times.
Yes. For the New York Times, the general idea here was kind of just the velocity of the administration and news that's happening. Whenever we look at, I keep seeing these quotes online, which is talking about how the Trump administration is moving so fast and doing all these very big things that normally an administration operates at kind of the speed of a super slow speed, and in this case Trump is kind of going a million miles an hour. I think this creates a great environment for a news media business like the New York Times to capitalize on this more aggressively, and I think we saw this kind of in the last Trump during his last term. These news corporations were benefiting, but kind of for a different reason. It was because of their constant criticism and kind of the way that they were able to construct Trump as doing all these bad things. But I think now it's just there's so much news going on that Trump is causing that I think it's creating a natural situation for people to have to go to these news organizations and keep up with what's going on. So I guess I can share just some brief data on this as well. I think you start to see some strength in things like the web traffic of the New York Times has kind of continued to just trend up. And I'm sure with some of the more recent days on tariffs, it's only getting stronger. And then you could even see things. I think this one is interesting as well. This is the New York Times. YouTube subscribers is kind of skyrocketing. Even when you look at some of the change in YouTube view counts as well. So the black number here is the YouTube views that New York Times is gaining over time. Essentially, this is validating the idea that there is so much news that's so important that people need to keep up with, that it will potentially trickle down and benefit something like the New York Times, which also has the dual benefit of not being really impacted by tariffs and or even potentially even a economic slowdown. The New York Times might be more resistant to those situations.
Yeah, again, I've been trying to find things to kind of hedge against this a little bit, where it could be, again, it's obviously been very, very heavy news cycle, very hard to keep up with things, even in preparation for a meeting like this one, hard to keep up with everything that's going on here. So it's an interesting one. I mean, for New York Times, it's always one in the past. I've looked at login, search volumes while you're talking. I mean, you do see some slight spikes in New York Times and login. I know membership sharing is an interesting one. But yeah, so there's a number of areas. Well, I'll look a little closer here from New York Times to see, could this be? Because whether it's a full 4 years of Trump or whether it's whatever is going on. I mean, it just seems to be a very rich environment where they're going to do pretty well. And yeah, get pushed in this direction. People that's where they get their news from. I mean, again, I don't know. Do you think in any ways the Newsmax IPO ties in any way, or just news in general right now, or is there a more macro news trade?
Yeah, I mean the Newsmax IPO was maybe a one-off situation.
Yeah, more of a meme type event.
But yeah, I do think that news businesses and in general there's some interesting opportunities in the market of some multiple contraction businesses where you see things like just an example would be like Duolingo kind of moving down on this news and on these things where their business is not at all materially impacted by any of this news. So I think it is interesting to look at these businesses which have almost no material impact from what's happening, even with tariffs, or could actually benefit in volume. Another one similar to New York Times would be something like eBay as well, right? Where when you're talking about all these tariff, making things more expensive, making it harder to import these cheap items, I think consumers flow to the secondhand market, and it's a digital business. So yeah, I think there are businesses like this where the volume of their business and the revenue generation areas of the business are not really impacted by this news. So there's maybe even potential upside in some of this volatility. And then it's just picking out the ones which would benefit but won't collapse when it ends. Because there will be some businesses like that where they're going to see strength during the tariff fear, and then the second that it's over, they'll kind of collapse and be an inverse to the market as people go back into the higher risk businesses.
Yeah, I mean, we saw similar things with gyms during COVID, where there was risk, someone out of business, but it obviously strengthened Planet Fitness and things like that, where I think this getting pushed to the brink and enduring pain, and maybe that is kind of part of the macro here of what Trump is doing. If we endure pain, but we can withstand it more than them, other countries. So it is an interesting element of, the game theory. It's always the quote of about how Bezos handled, I don't know if you know much about this one, but the acquisition of diapers.com when Amazon did, but the quote is that fighting Amazon's like fighting somebody that is willing to drown themselves in your own blood. So they can cut their own jugular. You lose blood, but you will drown in that blood. So whatever pain they induce, they'll feel it more. And it will be interesting to kind of figure out. So timing this right, making sure you have resources to figure out what the winners are once they start to establish themselves, I think will be pretty big. And I might have to hop off, but let's go. Want to go to the next one, or
yeah, we'll
my nan's gonna be head out soon, so
we'll end off with
another one on the way. What you got to deal with? But I forgot that 6 o'clock was the time for me on the East Coast here. But I got another minute or two here. We can do it. At least for
Sure.
me, and again, you can keep going.
We'll end off with Monster Energy.
Cool.
I think this one is interesting because it's maybe similar to the New York Times, what we were just talking about, in terms of having a dual situation of like strong things going into their business. New York Times, has more interest in their news articles and strong subscriber base growth, and then they're not really impacted from the tariffs. Monster Energy, it's a little bit similar. It's seen as a consumer staple, so it would be benefiting in a situation like this no matter what. And then plus it has the dual benefit of the white monster trends. And I think people might not be familiar with what this is. Essentially, how my 20-second description of this is, I think a lot of people heard about the Saratoga water trend and how much that impacted Primo Water and this massive thing that got hundreds of millions of views. I think the one that's flying under the radar is White Monster, which is similar. It's like a TikTok trend of people working out and drinking White Monster, and it's gaining a lot of notoriety. But actually, the volume of this is very, very significant as well, to the point where it's actually moving the searches for Monster Energy in general. So I'm sure Nolan could kind of pull that up as well. But this is the TikTok views for White Monster. And when you pull up some of those Google Trends charts as well, and you're comparing the volume of White Monster to things like Monster Energy, you can see how it kind of starts to move the whole market a little bit.
Yeah, I guess I was gonna bring my son up, but I think I can usher us off here, at least on this portion of it. We might say hi. You might hear a hi daddy in the background, but I guess with the microphone, maybe you can't. But I'm always looking from, I've said Monster Energy drink is my North Star in terms of Google Trends that have laid itself out, where, again, I'm sure my age, was in college and graduated 2009, and I had drank Monsters to stay awake, and you could see Monster and caffeine was always been my one. So I've used this to assess for search volume for Celsius and caffeine, but you have a macro going on of energy drink spiking up. You have more specifics when I remove this of things that are going on with White Monster. And again, you can tell us other terms there, but our nanny's going to head out. That's enough for me though. But yeah, interesting markets we're in, interesting times. Yeah, so a lot of news to keep up with, and I'm glad we chatted, Adrien, on this one, and who knows what we'll be in a week from now.
Cool. Yep. We'll catch up soon. And I'm definitely excited to even recap some of what we talked about on this episode next time on our next episode. But yeah, it's an interesting market, and we'll talk to you guys soon on the next episode of What's Trending. See ya.
Thanks, Adrien. Bye, guys.
Bye.